Welcome to the Trading Desk, where money talks. My name is Dave Floyd with Aspen Trading Group here in Bend, and with me as usual, Matt Davio of Red Rock Partners and Jesse Felder of Felder & Company. Before we get into today's show, let's take a look at what the markets have done over the last couple of weeks.
This week on the Trading Desk, we had a huge rally, 8% rally here, summertime rally. Times are thin, the action is thin, and traders are only working Tuesdays through Thursdays. You see the S&Ps here rallied 8% last week. That's 8% in 5 days. The head and shoulders pattern on the daily chart has been thwarted, but if you take a look at the next chart, which is a weekly chart of the same index, we're about to break out here on an inverted head and shoulders chart, and this actually shows a projection. If we break above this 950 level, which was our recent high, we could project as high as 1150 to 1250 over the next couple months, which would play out very nicely for the bulls in this marketplace. The 10-year rate is the next chart that shows the 10-year rate still poised. Got bounced here at 4%, but it looks to me like it is going to go higher. I think we will see higher rates. Along with that, the final chart, the dollar index, is also showing some pullback here, but solid long-term support here in the 78s, and look for a rally in the dollar at the last half of 2009.
As you can see, there's been a very large rally in the S&P since our last show, and it was one of the things that Jesse, you, and all of us were talking about. Everybody was looking for the pullback and that bearish head and shoulders pattern. If you're not familiar with it, it's a technical pattern, right. And the market did just the opposite.
Well, as we say, the masses are
usually wrong.
Well, there's a
all the people can't be all right all the time.
That's right.
It's just the way it goes in the markets every day.
Yeah.
And you know what I thought was interesting?
And patterns usually don't work like that, I find. So.
No, it's usually poking and prodding, right, and getting it to play out. But what I thought was interesting is when I captured those charts this morning, I showed the daily chart with the head and shoulders that failed. But if you look at the weekly chart, the weekly chart seems to be pointing in the right direction, has an inverted.
And the longer-term direction is always the one you want to favor.
Exactly.
Then again, to get good symmetry there, you're going to need to get back to those, at least the November lows on that right shoulder.
Sure.
So, but and it's always malleable.
So we're up 8% now in 5 trading days. It's been 10 since we last filmed, and it's been an 8% rally, and I think it'll continue. I think everybody's like we talked about this a little bit before, Jesse. Everybody's blazoned, and the bears are just getting burned here because it's
everybody's getting burned. We're still below the high we hit 6 weeks ago.
Right.
I mean, barely.
Yeah.
So everybody who got bullish there is still underwater, and then everybody who got bearish on this last sell-off is
and again, on a long term,
that's what happens in a trading range. Is you try and work everybody out.
And of course, we're in the middle of the summer, and a lot of people don't have a tremendous degree of conviction. So, barring some exogenous event, we're probably just going to continue.
And honestly, unless you're trading, you shouldn't be in this market right now. And even from a trading perspective, it's Tuesday through Thursday. You're taking off Monday, you're taking off Friday, like the trading desk. The volume's not there. We're bearish up to 1150, and we're sitting here at 950. So we can go a long way and still be bearish in the technical picture.
Yeah, exactly.
So,
well, we have to take a break, but when we come back, we'll talk a little bit more about this and also some of the lighter side of chatter on the trading desks, especially during the summertime trading. You're watching the Trading Desk on COTV, Channel 11.